Hey guys, welcome back to another video. In this video, I'm going to be talking about Microsoft. We can see that over the 12 months chart, they're up 70%, while the rest of the market is only up 23%. So Microsoft is doing a lot better than the rest of the market over the 12 months chart. And before I get into the financial statements, I wanted to talk a little bit about Microsoft's business model. So for those of you who don't know, Microsoft is currently the world's largest tech company. They build and sell personal computing devices, cloud services, and computer software, and they sell those to businesses and consumers. The fastest growing segment and largest source of profit for Microsoft comes from their cloud service products. And because they have so many different products, Microsoft's business model is actually broken up by customer demographics, not by product. And their three main customer demographics include productivity, the cloud, and personal computing. Microsoft's productivity products are basically designed to increase customer communication and efficiency. Microsoft Office software, Microsoft Dynamics, and the professional networking site LinkedIn are all included in the productivity business segment. Microsoft's cloud products are designed to provide cloud services to businesses, especially for software engineers. And some of these products include Microsoft Azure, SQL Server, and Github, which are all pretty well-known products in the programming community. And then lastly, their third segment, their personal computing products, are intended to provide customers with the most cutting-edge technology. So these products include the Windows operating system, gaming products like Xbox, and then also search advertising through their Bing search engine. Along the lines of their gaming products, Microsoft also recently acquired Activision Blizzard, one of the biggest gaming companies in the world, with big games like Call of Duty, Overwatch, World of Warcraft, Diablo, and Candy Crush. All of Microsoft's products produce revenue either through licensing its products to third parties, subscription-based models, especially for their Microsoft Office software, and then also one-time sales through distributors and retails, particularly in their gaming segment. So now I wanted to talk a little bit about some of the recent news that came out surrounding Microsoft, particularly the fact that it's been a while since Microsoft had a stock split, and because of how fast their stock has been growing recently, it could be positioned currently for another stock split. They point out some key points right here. First off, that Microsoft's long history includes 9 stock splits, and with its current AI-driven growth, another might be on the horizon. Right here, they point out that if you had bought one share between the initial public offering in 1986 and the first split in 1987, it would have multiplied into 288 shares after all of the 9 stock splits they've had in their history. A $1,000 investment in Microsoft on the day of that first stock split in 1987 would have been worth $1.05 million today. So obviously very impressive returns for Microsoft over the last 2 decades. Right here, they point out that stock splits don't actually add value or open up buying windows for companies, but they do make it easier for smaller investors to afford a single share. At the same time, a stock split often signals that the company's board of directors and management team have high confidence that the stock will continue to rise, and that vote of confidence should be seen as good news. Then they talk about right now how Microsoft is currently trading around the $390 range, and it currently has a market cap of $2.9 trillion, so nearly a $3 trillion market cap. They touch on the fact that recently Microsoft started investing a lot of money, specifically $13 billion into OpenAI and the AI the AI engine that drives ChatGPT, which runs on Microsoft's Azure cloud computing platform. The company could also benefit from the improving health of the global economy as inflation pressures fade away, which will likely positively impact a lot of growth companies, especially in the tech sector. In addition, the recently closed buyout of video game giant Activision Blizzard should drive important changes across the company's entire business. Then lastly, in the words of Microsoft founder Bill Gates, the development of artificial intelligence is as fundamental as the creation of the microprocessor, the personal computer, the internet, and the mobile phone. And at the moment, it looks like Microsoft is positioned the best, if not one of the best, in securing a leading role in the AI revolution, which will obviously support its growth for the long term. So a lot of good news surrounding Microsoft. Obviously, their stock has been performing really well recently. Their financial statements look really strong, as we'll look at in a moment here. And also because of their investments in artificial intelligence and the impact that AI is going to have on the tech sector, they could be positioned to gain a really strong advantage over their competitors. So now we can see their financial statements right here. This is the juice of their income statements, or of their financial statements, the income statement. We can see revenue increased from $50 billion to $56 billion year over year. So that's an increase of about 13% year over year. So that's pretty good revenue growth. Then we can also see their gross profit increased from 34 billion to 40 billion, and net profit increased from 17.5 billion to 22 billion dollars. That's an increase of 27% year over year. And I know it doesn't say it here, but we touched on earlier when I was talking about their business model, how their business is broken up into 3 segments, which is productivity, the cloud, and personal computing. Of this $56 billion of revenue here, about 18 billion of it came from productivity revenue, which was up 13% year over year. 24 billion of this came from cloud revenue, so that was their largest, most profitable source, which increased 19% year over year. So it was also their fastest growing source, as we touched on in the business model. And then lastly, their personal computing revenue was 13 billion, which was only up 3%, but still made up a very substantial portion of this $56 billion of revenue. Then next we can go to page 5 to see their balance sheet. We can see currently they have total assets of $445 billion, an absolutely massive number. And then also we can see they have total liabilities of 225 billion and total equity of 220 billion. So their balance sheet is split down the middle around 50-50 between liabilities and equity. And we can see their retained earnings line item increased from 118 billion to 132 billion. So they do have more cash to either redistribute back to shareholders through dividends and stock buybacks, or also to reinvest back into their company. Lastly, on page 6, we can see their cash flow statement. Their operating cash flow was $30 billion, up from $23 billion. And then we can see in their financing activities right here, they repurchased $4.8 billion of common stock, and they paid out $5 billion of cash dividends. So they are prioritizing returning value back to shareholders, which is obviously a good sign for everybody invested in Microsoft. Now I want to get into the valuation of Microsoft using this discounted cash flow model. I'm using a growth rate of 9%, which comes from their historic cash flow growth for their free cash flow metrics, which we can see right here. In 2018, they had free cash flow of 38 billion. In 2022, they had free cash flow of 59 billion. So over that 5-year period, their cash flows increased by 9.23% compounded annually. So that's the value that I'm using for their growth rate. 4% to be a little bit more on the conservative end for the next 5 years after that. The weighted average cost of Microsoft's capital, which I'm using to calculate the discount rate for this DCF model, comes from this calculator right here. I basically just took the interest rate of their debt and then calculated the interest rate for their equity using these metrics right here. As you can see, using this formula, that comes out to 9.29%. And as we touched on earlier from their balance sheet, their equity and debt is split down the middle at around 50%. So we can find the weighted average cost of all of their capital by taking the equity proportion of their balance sheet, multiplying that by the cost of equity of 9.29%, adding that to the debt proportion multiplied by the cost of debt, and then multiplying the debt proportion by the tax shield, 1 minus the tax rate because debt is a tax write-off. And that comes out to 5.82%, which is what I'm using to calculate their discount rate. We can see that currently on their balance sheet, if you subtract their debt from their cash, they have $38 billion of cash, and they currently have a little over 7 billion shares outstanding, which means that their intrinsic value per share is estimated to be about $168 per share, which means that at the current share price, you probably wouldn't want to buy Microsoft's stock. You probably want to wait or not really wait, because their stock probably isn't going to drop, but you probably want to buy them at a bit of a cheaper price. But that being said, this DCF model uses a lot of assumptions, including the projected growth rate for the next 5 years of their growth. And so using another valuation model or other reasoning and justification, you could probably come up with a reason for why Microsoft would be a good buy at the current share price. So now we can see the competitor or industry analysis here, comparing them to Apple and Google. In comparison, we can see that Microsoft has the best profit margins. They have a 68% gross profit margin, 34% net profit margin, which is higher than the gross and net profit margin for Apple and Google. They also have the lowest, or the second lowest, debt to equity ratio here, and they're also currently trading at around 37 times earnings, which is higher than Apple and Google, which might signify that investors currently anticipate that Microsoft is going to grow faster than Apple and Google, or it could mean that they're currently overpriced, depending on how you look at it. And lastly, they have the highest dividend yield out of the three companies, with a 0.8% dividend yield. So basically, for every $100 that you invest into Microsoft per year, you're getting paid about, I believe, like $8. So it's decent. Or I might be wrong with that. Maybe 80 cents. I'm not entirely sure on my math right now. But based on this, it looks like compared to Apple and Google, Microsoft has really good profit margins, but they're obviously trading at a higher P ratio. So depending on what you prioritize, profit margins or evaluation, you might want to invest in one over the other. Then over here, we can see I'm comparing Microsoft to the other companies I've looked at on this YouTube channel in the past. Right now, Microsoft is not trading below their intrinsic value per share, so they didn't end up on the share price compared to intrinsic value table. We can see all of the companies we've looked at so far that were trading at the best share price compared to their intrinsic value. Then on the right hand side here, we can see in terms of growth rate, Microsoft's growth rate came out at around 9%, which wasn't good enough to get them onto this table. AMD had the highest at 83%. For dividend yield, Microsoft had a 0.8% dividend yield. So that means that they're not good enough to get onto this table either. Intel had the highest at 5.52%. For these tables right here, gross profit and net profit, Microsoft was really strong. They come in 6th place on the gross profit table at 68%. Adobe had the highest at 86%, and then they come in 3rd place on the net profit table at 34%. Oxy had the highest at 36%. For Q3 year-over-year revenue and earnings growth, we can see Microsoft comes in 1st place for revenue growth at 13% and 2nd place for earnings growth at 27%. We can see the Q2 tables right here. It looks like Microsoft didn't really make it onto the final Q2 table. And so we'll be looking at a lot of companies over the next while here for Q3. We'll be able to see if there are any companies that landed on the Q2 and Q3 list, which will show that those companies are consistently outperforming other companies that we've looked at. And then lastly, we can see right here for stock performance over the last 5 years, Microsoft is up 261%, which is definitely a lot better than a lot of companies we've looked at. Comes in 8th place right now. Tesla had the highest at 850%, which is what we looked at in the last video. So let me know in the comment section down below what you guys think of Microsoft. Is it a good buy right now at the current share price? Let me know your thoughts down below. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.